Hello, I'm Alex Zarifis, and I'm very excited to talk to you about how artificial intelligence is creating new business models for existing insurers and new insurers that are disrupting this sector. We will look at whether these new AI-driven insurance business models of existing insurers and disruptors are converging and could merge in the future. AI is a catalyst for fundamental changes to insurance business models. The current upheaval is seeing some incumbent insurers trying to do the same more effectively, while others evolve to fully utilize the new capabilities end users these new technologies bring. At the same time, technologically advanced organizations from outside the sector are entering and disrupting it. Within this upheaval, however, there are signs of a convergence towards an ideal and prevailing business model. This research identifies one example of an existing insurer and one of a new disruptor, and evaluates whether their models are converging. The findings support a high degree of convergence, but some differences are likely to remain after this transitionary period. AI is changing the insurance value chain, causing upheaval, as illustrated in Figure 2. The current insurers are moving into new areas, while tech companies are moving into insurance. There are, however, several signs of convergence between the models of incumbents and disruptors. Firstly, there is convergence in technologies, such as, for example, the use of chatbots and IoT. Secondly, there is convergence in processes. For example, the interaction with the consumer. Thirdly, there is convergence in the strategy on costs and pricing. There are, however, two areas where there seems to be a limit on the convergence. This seems to suggest the business model of the incumbent and the disruptor will remain distinct. These are evaluating risk and the cost of attracting the consumer and making a profit from them. AI is changing the way risk is evaluated by an insurer. These new ways of using data and technology to assess risk in turn generate new insurance services. There are also changes to the cost of attracting the consumer and making a profit from them. The technology company offering insurance has some advantages in terms of the cost of attracting new consumers and the profits they generate. While the incumbent insurer must spend on marketing to attract consumers to their insurance services, the technology company uses existing users. Furthermore, while the insurer is dependent on their revenues from insurance services, the technology company can draw profits from other services and provide insurance without any profit. That does it for today. Have you had experiences related to what I've talked about? Please let me know.